Namaskar to all. I, Pratibha Chaudhary, IRS, Additional Director of Income Tax, Publicity, Directorate of Public Relation, Publication and Publicity, Central Board of Direct Taxes, New Delhi. I extend a warm welcome to all of you to another informative and special episode of Samvaad. Friends, today we have come up with a very important informative series on the topics of exemptions under the Income Tax Act. In this special series, we will be covering 8 crucial topics related to exemption provisions and their practical implications. We are honored to have with us today a distinguished guest, Shri B. Bala Krishna, IRS. We heartily welcome you, sir.
Thank you.
Sir is an IRS officer of 2002 batch and is currently serving as the Commissioner of Income Tax Exemptions, Hyderabad. Sir has rich and diverse experience of income tax and worked over 23 years in the department. In his present role as CIT Exemptions in Hyderabad, he has led numerous outreach programs for stakeholders and organized extensive capacity building exercises for JAOs and FAOs, especially in the light of the rollout of new provisions. Sir has also held key positions across various verticals and worked in investigation division, admin, nodal officer to the Honorable Election Commission of India and received with his team Best Election Practices Award 2018. Sir, we welcome you and thank you very much, sir, for giving us time.
Thank you, Pratibha. And I also thank the Directorate Publicity for giving me this opportunity.
Sir, kindly explain to our viewers what are the different types of income sources for a charitable or religious trust under the Income Tax Act 1961.
The key sources of income includes earnings from the property held under the trust, voluntary donations and contributions received, business income if incidental to the objectives, capital gains, etc. At times, due to the non-utilization, there can be income accumulated under section 11(2), and in case of non-compliance, there can be deemed income to be taxed as specified income or anonymous donations.
Sir, kindly explain to our viewers about how are donations or voluntary contributions treated under tax law.
Well, the general donations are treated as income and they must be utilized for the charitable or religious objectives. Second is the donations with a specific direction to be part of the corpus and are to be excluded from the income from the application purposes for the calculation for that year. Next is the accumulation of the donations. During the year, if a charitable entity is not able to spend 85% of the general donations received as its application for the objectives of the trust, then it can accumulate such amounts either fully or partly for spending towards the objectives, but within a period of maximum of 5 years. These accumulations till the utilization shall remain in specific modes of the investments as mentioned in the section 11(5) of the Act. If the trust fails to utilize the accumulated amount for the specific objectives within 5 years, then it will be deemed to be an income in the 5th, that is the last financial year. Further, if the accumulated amounts failed to be in the specified modes of the investments as mentioned in section 11(5), then the year in which they cease to exist in the specified modes will be the year in which they are to be brought to the taxation. The accumulated amount shall be utilized for the purposes for which it was actually accumulated. However, there is a limited flexibility as per the section 11(3)(a) in specific conditions. Fourth is the anonymous donations under section 115 BBC, where the total income of the assessee includes any income by way of anonymous donations exceeding rupees 5 lakhs or 5% of the donations, whichever is more, then such income is to be subjected to the taxation at the rate of 30% with some exceptions. The anonymous donations received by an entity for the religious purposes are not subjected to such taxation. Further, the trust created for religious and charitable purposes, but if such anonymous donations are received for the educational institution or medical institutions run by the trust, then such donations are again subjected to the taxation as anonymous donations at the rate of 30% tax.
Sir, how are capital gains treated in the hands of charitable trust?
Capital gains from the sale of the trust property are exempted if the net proceeds are reinvested in any other capital asset used for the charitable purposes. Otherwise, if the proceeds received are utilized for the objectives of the trust, then also the same can be treated as eligible application.
Sir, can charitable organizations use corpus donations or loans, and will it be treated as application?
No. Any amount spent from the corpus donations or loan taken after the year 2021 shall be treated as an application only to the extent in the year when the corpus is replenished or loan is repaid, but within a maximum period of 5 years. Further, such application is subjected to the applicability of TDS provisions, 48(3) provisions and other restrictions laid down against the specified persons.
Sir, kindly explain to our viewers what are foreign donations and can registered entities receive foreign donations?
Well, foreign donations are contributions received from the donors from the outside India, but they must comply with the FCRA rules. Foreign donations can be received by the charitable organizations within the regulations as prescribed under FCRA, and they can be treated as voluntary contributions or corpus donations depending upon the nature of the donations.
Sir, can a charitable institution apply its income outside India?
As per the section 11(1)(c) of the Income Tax Act, application can be outside India only if it is for the promotion of the international welfare in which India is interested, and there shall be a board, general or specific order for incurring such expenditure.
Sir, what is meant by application of income?
Application of income refers to the utilization of the trust or institution's earnings for its approved charitable or religious objectives within the same financial year. For example, a school trust spending on teacher salary or infrastructure can be counted as application. Like so, a hospital under section 1023(6)(a) investing in medical equipment or patient care is also treated as an application. A temple using the donations for the daily puja or annadanam is also considered as an example.
Sir, our viewers would like to know, is it permissible to accumulate income instead of applying it in the same year?
Yes, accumulation is allowed. Up to 15% of the income can be accumulated annually without any specific conditions. For the accumulation beyond 15%, the trust or institution must file Form 10, clearly state for the purposes for which the accumulation is made, and these accumulation shall remain in the specified investments as laid down in the section 11(5).
Sir, kindly explain how does application differ from accumulation?
If the application is made for the objectives of the trust in that particular year, then it is called as an application for the objectives of the trust. But if the trust decides not to make the application of such incomes, but to keep the accumulation for a maximum period of 5 years and utilize for the objectives laid, then it is called as an accumulation. So, the utilization or for the period for which it is kept as a reserve for to be utilized for the objectives of the trust will decide whether we are applying in that particular year or are we accumulating for a future usage but within a maximum period of 5 years.
Sir, kindly explain, can excess of expenditure is allowed to be carried forward to the next year to determine eligible application?
No, no excess of expenditure is eligible to be carried forward to the next year for any purposes.
Sir, is application treated on accrual basis or actual basis? Please explain.
The expenditure will be treated as an application only on actual payment basis. Even in the cases of Section 8 companies also, which are one of the eligible entities for the claim of the charity, the expenditure can be claimed as an application only when it is actually spent but not on accrual basis.
Sir, can depreciation be claimed as application of income?
See, basically the concept is not to allow double deduction. If the capital asset is purchased for the objectives of the trust, then the entire capital expenditure can be claimed as an application in that year itself in which it is actually spent. In this case, there can be no further claim of the depreciation on this particular asset in any subsequent years. However, if the entire capital cost is not claimed as an application in the year in which it is actually spent, then the trust can claim the depreciation at the allowable rates every year subsequently. In other words, there can be no double deduction both at the time of the purchase of the capital asset and as depreciation again.
Sir, how are hundi offerings treated under tax law? Kindly explain.
There are few conditions to be fulfilled. First is the classification shall be as a voluntary contribution under section 12. Then consider the income of the trust, then exempt under section 11(1), and if you applied for the religious purposes within India, then exempt under section 11(1)(d) if it is specifically directed by the donor for the corpus.
Sir, how should hundi income be accounted for? Kindly explain to us.
Well, there are few conditions. They are record under the voluntary contribution in the income and expenditure statement, and record as corpus if the specific donations are received with a specific directions. Then maintain proper transparency while accounting such trust regulations, and follow proper accounting policies to make the entry of all such voluntary contributions received.
Sir, can religious trust accumulate donation and hundi income?
Yes, up to 15% of the total income including the hundi collections can be accumulated without any specific conditions laid. And if the accumulation is beyond 15%, and it can be allowed up to 5 years by filing a form 10 under section 11(2).
Sir, how is business income like sale of prasadam or souvenirs treated? Kindly explain to our viewers.
Yeah, there is a specific section, that is section 11(4)(a). If the activity is incidental to the trust religious objectives and if the separate books of accounts are maintained, then any incidental business income is allowed.
Sir, what does merging charitable trust or institutions mean under the Income Tax Act?
A merger involves combining of the two or more charitable trusts or institutions into a single entity. This is typically done to streamline the operations, optimize the resources utilization, or broaden the scope of the charitable work. As recently section 12(ac) which is introduced, it provides the conditions under which the merger of the charitable trust or institutions will not attract any provisions of the chapter 12(eb) which relates to the taxation on accredited basis as exit tax. Exit tax under chapter 12(eb) will not apply if the merger satisfies the conditions such as the merging of the entities have same or similar objectives, the other trusts or institutions are registered under section 12(a) or 12(ab) or approved under 4, 5, 6 or 6(a) clauses of the section 1023(c). The merger complies with the prescribed conditions as notified under the income tax rules.
Sir, we are truly grateful for your time and enlightening us on such an important topic. Your insights on the different provisions of exemptions have been immensely valuable. I am truly grateful to our esteemed viewers for their time and patience. Please reach out to our website incometax.gov.in for more information and educational content. Do follow us on our social media handles like X, Instagram, Facebook, YouTube, and LinkedIn. Please keep watching Samvaad. Stay connected to us. Namaskar. Jai Hind.
Thank you. Namaskar.